What made the European Union effective in crisis? Imagine a group of countries that decided to work together so closely that they could handle problems bigger than any one nation could face alone. That's what the European Union has become. Its success in managing crises comes from a mix of smart planning, strong teamwork, and quick decision-making. Over the years, it built a set of tools and rules that help it respond fast and effectively. Starting in the 1990s, the EU created agreements that went beyond just trade, including aid, economic support, and emergency help. These agreements gave the EU a way to act quickly when disasters struck or when urgent needs arose. The EU also set up clear procedures for crisis management. In 2003, the European Union Council made plans to coordinate responses better across all member countries. When the Indian Ocean tsunami hit in 2004, the EU used these plans to respond faster. The Luxembourg presidency in 2005 made a special action plan to improve how the EU handles disasters in other countries. These steps made the EU more prepared and flexible. Another key factor is how different parts of the EU work together. The European Commission, which is like the organization's executive branch, became the main group providing technical help and organizing responses. The President of the European Commission and the Secretariat worked closely with leaders from big and small countries. This teamwork meant decisions could be made faster than if all 27 member states had to agree first. Many experts say the EU's crisis response tools are even better than those of NATO or the United States because they combine diplomatic, economic, and administrative resources smoothly. Financial tools also played a big role. During the Eurozone crisis in the 2010s, the EU used emergency funds, new rules for budgets, and a banking union to keep the economy stable. The European Central Bank bought bonds and supported banks, which helped prevent a total collapse of Europe's financial system. These moves showed that the EU could act decisively to stop economic disasters from spreading. The EU also proved it could adapt policies to new challenges. During the migration crisis, it expanded the European Border and Coast Guard Agency and made agreements with Turkey to control the flow of migrants. These new strategies helped manage a problem that was overwhelming many countries. But none of this would work without the political will of member states. Countries had to agree to work together and accept some loss of control for the greater good. When crises hit, they often set aside disagreements and acted as one. This unity made their responses more effective and boosted public confidence. The EU learned from each crisis. It kept improving its plans and tools based on what worked and what didn't. This ongoing process made it better at handling future emergencies. Of course, challenges remain. The EU still struggles with a unified foreign policy and balancing quick decisions with democratic accountability. Its institutions were not originally built to manage crises, so it keeps adjusting to meet new demands. In the end, the EU's ability to respond effectively in crises comes from a mix of strong institutions, quick decision-making, financial support, policy flexibility, and the shared will of its member countries. These elements work together to help the organization face big challenges and often come out stronger on the other side.